because inflation figures came out about an hour ago, Liam, not in the direction that everybody was predicting.
This is a surprise and a shock as well as a surprise. Inflation was 10.1% in January, so that meant the basket of goods, the consumer price index basket of goods, was 10.1% higher in January this year than January 2022. I think almost everybody expected it to fall into single digits, so 9.7, 9.8, but actually it's now 10.4. We can see these numbers on a graphic, I think. So there it is, the January number, 10.1. We thought that was the end of double digits. In February, it went up to 10.4, and that's a number...
What's causing it, Liam?
This morning, and hang on to your hat, here it comes, Eamon. In February 2023, food price inflation was 18.2%. That's the main thing that's causing it. And that food price inflation, Eamon, that's the highest since 1977. It's a 45-year high.
Is this all sorts of food, or is this, specific food?
It's the real issue that the ONS have talked about for the highest food price inflation there since in 45 years is fruit and veg. Remember, over the last month or so, we're paying a lot more money to heat greenhouses. There's been bad weather in certain parts of the country, parts of the world, particularly North Africa, where lots of our vegetables come from. And we all know that that's led to some rationing and panic buying, and that's pushed up prices even more. Food price inflation there at over 18%. Restaurants and hospitality inflation, that's also up around 13%. It seemed that as the economy was getting better, as we escaped recession, as inflation was coming down, we can feel this in our own lives. More and more people were thinking, oh, well, maybe we'll go out for a meal. Maybe we'll start getting back to a sort of pre-lockdown near normal. But that's been costing families a huge amount of money, not least because a lot of the hotels and restaurants that we've come to enjoy and rely on over the years, they've gone bust during COVID, or they have massive lockdown-related debts, so they have to charge higher prices. So it's food, restaurants, hospitality. That's what's driving this number.
And look, the optimism that you're describing people beginning to feel was boosted a bit last week when the OBR was saying, you know what, we could see inflation going down to 2.9%. Music to the ears of the Chancellor and of the Bank of England.
The budget, which said we're probably going to avoid recession, the Office for Budget Responsibility.
What do they do about this? If inflation's going up, because, of course, interest rates also it feeds into this whole banking crisis that we're on the
This really puts the Bank of England on the horns of a dilemma, and they have their next interest rate decision tomorrow. I'll be at the Bank of England at noon tomorrow reporting on that. Look, ordinarily you'd think inflation's going up again. Crikey, we need to raise interest rates to bear down on that. But as you say, Isabel, with all these market jitters and concerns about a fully blown banking crisis, the Bank of England is going to be really reluctant to put interest rates up. I think they'll take their cue from what the Federal Reserve does today. That's the US central bank, the most influential central bank. They're going to make their latest interest rate decision. If they raise a little bit, the Bank of England may feel that they can raise a little bit as well.
Keep us posted, Liam. Thank you very much indeed.